Hey guys, it's Matt Z here from Optimus Futures. I'm going to go over the MTF Overbought IO indicator. I'm going to focus today on the momentum, which is the last part of the indicator. As I guide some customers through this indicator, they're giving me their feedback as far as what is understood and what's not understood about this indicator. So I'm going to try and kind of explain it to you based on practical experience and the questions that and the questions that people have asked me or our customers have asked us. So you have to understand, first of all, that markets operate, and you obviously, this is a pretty obvious statement, at different velocities. So the different speeds that they operate. There's days that it's extremely volatile, the days that it's not. But your goal is to really stick as much as possible with the winning trades. And this is what the goal of every trader should be, regardless of the method that you use. That if all of a sudden you see a run in your trade, you want to stay with it as much as possible. You obviously won't be able to get the top. You obviously, sometimes you'll take a little bit and then it will run up. Sometimes you'll take a hit and then it will go in your favor. Those things happen to every trader. It's not you. Don't take it personally. Everybody goes through that and everybody has to learn how to handle that. However, there are times that I believe that the market will be in your favor in such a way that you'll be able to potentially make more than the average trades. Okay? And having said that, you know, there's always risk in trading, especially in futures and spot FX that are leveraged products. But I'm going to go through this right now, just focusing on, excuse me, on the last part. So what I like about those videos that I make is that every day I see a different scenario that I could explain, and that would help me, you know, kind of tell you what's going on. So we're going to start here with the micro E-Mini S&P, and we see here that the momentum, which is here, is fading, right? There's a fade. So there's, in the short term, there's a slow kind of, the trend is kind of fading really slow. It's weakening. But the higher time frame, you know, C stands for current again. Higher time frame is going, it's losing momentum really fast. Let me explain what happens. When you have a market that's trending all the way up or all the way down, there's a certain change that occurs that the market wants to turn, right? So the turn could be rather abrupt, or the turn can be rather slow. And sometimes you see it to kind of here like a saucer type of, you know, or straight support. But sometimes you'll see here, for example, a saucer type of, you know, it's been going all the way down, and here you have kind of a saucer, you know, it's happening, and then it's going up. So this could happen really fast, or it could happen really slowly. And this is what this indicator is trying to measure. How fast is there's a trend or there isn't a trend. So a fade is anti-trend when there's actually a trend that would say trend and trend plus. But here you have on the current time frame, it's losing momentum. So the market has been going down, and now it's slowly potentially attempting to go a little higher. However, on the higher time frame, although it's been going down, it's going rather fast. So essentially you look at both those things and you see that the momentum of going down is losing steam here a little bit. And higher, although you're trading short term, higher time frame does matter. Okay, I'm going to skip the mini S&P because it's just the same, and I'm going to go right now to let me see here. I'm going to go to the Dow. This is the regular Dow, and we see that the current trend it's actually turned around and it's actually trending up, right? So there's a trend in place, but and here's something really encouraging. Here's an interesting part. So let's say that at the end of the day you became long, or somewhere near the end of the day, and so the current short term has been going higher. So it's trending. It's not trend plus plus. It's not trend plus plus. It's just trend. So it's starting to go up. However, you see that the higher time frame is really losing momentum, meaning that obviously, you know, I know that some people, again, you know, as I said in previous videos, say, well, I can't really define a trend. You know, some people get philosophical about it. If you have doubts, if this is a trend that's going down, you can simply call a 10-year-old and ask him if this is going down, or you can use a ruler. It's very simple. But here you see fade plus plus. It means it's really losing momentum fast. The trend is losing its momentum, so it's not going down further. So if you're long, it's good to stay in this market. If you're short, you know, then you have a little bit of a mixed signal. It's up to you to decide whether to do it or not. If rather not to evade the issue, me personally, you know, I would focus on the fact that if it was a day trade, that on the trend it's been going up, so the odds are there, and since it's now we're near the end of the day, I would probably stick with it. Here we have a little bit of a scenario. Okay, so the short term is attempting to go higher, right? Because it's fading. It's been going down and it's fading, so it's losing its momentum on the way down. But you see that the long-term trend is still down. Nothing has changed, and it's trending very strongly. So if you're long in this trade, you should be a little bit afraid, you know, because the trend of trend plus plus could be going down here. If you're long, again, you know, you have it's fading on the short term, and here, meaning that it's weakening. And again, not weakening strongly, but it's weakening. But the trend, the long-term trend here, and again, sorry for being so repetitive, is still very strong. So if you're long in this market, I would probably avoid it. If you didn't make a profit right away, don't stick in it for too long. You most likely will have to exit. I'm going to see the micro here on the Russell. Okay, so here's something very interesting, okay? And again, I love those scenarios every day to see them, because sometimes it's really hard with the naked eye to see what's going on. But what we see here, that the market has been trending down here, and seems like it's trying to kind of go up, but the indicator is actually saying that the current trend is still, it's trying to go up, but what you see here is that you see that the higher time frame is losing momentum, and the current time frame is losing momentum. So most likely here we could potentially, and I should say potentially, see a reversal. But it's losing. So if you were long in this at the end of the day, for example, then obviously you see the market is trending up and it's losing its momentum from the previous periods. So the odds are a little bit in your favor, because the momentum of the trend down is losing. However, if you're short and it's not going in your favor, and you see that the momentum on both of them is losing steam, that's not a good thing. So again, those are indicators. They're not crystal balls. They're not necessarily tell you, where to go long or where to go short. But sometimes when you go into a trade, that's the hardest part, right? When you're in the trade itself. So you did all your checks and everything else, for risk, reward. Your method told you to go long, to go short, and then you start being in the trade a long time. Now, I don't know if time is a good thing when you're a short-term trader. I'll be honest with you. I always go back and forth on the value of time, but I think that time doesn't play in your favor when you're a short-term trader. Meaning that if you didn't make a profit right away within a certain time period, and again, go back to your method, back test it, see what average time there is until you realize a profit. But in general, or when actually a stop gets hit, you can actually measure that as well. But essentially, time is not something that plays in your favor, in my personal opinion, when you're a short-term trader. When you're a long-term trader and swing trader, maybe a little bit more. But when you're short-term, not necessarily so. Also consider another thing. There's also the psychology, right? So we all talk about trading in this bubble type of environment as if our emotions don't affect it. Meaning that there's indicators and you wait for a perfect setup and the trend is going up or down. But just remember, your psychology will play a really big role in it. Now, let's assume that you're just looking at the chart here just like that, right? You don't necessarily know, what's going on here. If the momentum is losing its trend, not losing its trend, you see a bunch of lines going up like this. This is why you have to resort to something that is rather objective. Indicators don't lie. Do they lag sometimes? Sure they do. That's technical indicators. That's what you have to work with. But at the end of the day, they also give you a good indication of what, is the status right now as far as trends and the state of the market in general in terms of volatility. That's it for now. Wanted to thank you for your time. If you need this indicator, I'll be more than happy to give it to you. It works on MT4 on Forex, MT5 on futures. And again, I hope it would help you. That's it for now, and I'll do more videos during the week. Thanks. Bye.